The S&P 500 closed out its best week since June as a report on Thursday showing slowing inflation raised hopes that the Federal Reserve would soon slow its tightening campaign. The broader market index added 0.9% to close at 3,992.93. This brought its gain for the week to 5.9%, its best week since the one ended June 24 of this year. The Nasdaq Composite added about 1.9% to end at 11,323.33, as investors snapped up tech shares on hopes interest rates would ease. The Dow Jones Industrial Average gained 0.1%, closing at 33,747.86. Tech stocks on Friday shook off a decline in cryptocurrencies. Virtual currencies tumbled sharply this week and once again came under pressure Friday after FTX filed for bankruptcy protection, and CEO Sam Bankman-Fried resigned. Bitcoin and Ether both declined. Still, tech stocks and related crypto stocks rebounded after opening lower Friday. The tech sector in the S&P 500 surged 10% through Friday, its best weekly performance since April 2020. Amazon was up more than 4% on Friday, while Google parent Alphabet was 2.6% higher. The Dow jumped more than 1,200 points on Thursday following a smaller-than-expected rise in consumer prices for the month of October, giving investors hope that inflation may be cooling. The S&P rose 5.5%, and the Nasdaq Composite surged about 7.4%. It was the best day since 2020 for all three indexes. Treasury yields plunged Thursday on the back of the weaker-than-expected inflation print. The bond market was closed on Friday to observe Veterans Day. From an equity market perspective, as long as the threat of much higher rates is out the way, this should remove a major headwind, Barclays head of European equity strategy Emmanuel Carr wrote in a Friday note. All of the indexes posted a winning week. The Dow was up 4.1% on a weekly basis, while the Nasdaq Composite advanced 8.1%. The week marked a resumption of a comeback rally for the bear market, which began in mid-October. Sarah Min says the S&P 500 closed out its best week since June, adding 5.9% this week, amid hopes that the Federal Reserve would soon slow its tightening campaign. The broader market index added 0.9% on Friday. The Nasdaq Composite added 1.9% as investors snapped up tech shares on hopes interest rates would ease. The Dow Jones Industrial Average gained 0.1%. Based on MarketWatch.com, investors finally got the inflation reading they were looking for, and are likely to get a split government for the next 2 years. That combination propelled stocks to their best weekly showing since June. On Friday, the S&P 500 even briefly crossed the 4,000 threshold, a level it hadn't breached in 2 months. The S&P ended the week 5.9% higher, closing just below 4,000. The Dow Jones Industrial Average rose 4.1%, and the Nasdaq Composite jumped 8.1%. It was the best weekly showing for the Nasdaq since March, and it came during a week when tech news seemed largely negative. Facebook parent Meta Platforms announced that it will cut 11,000 jobs, the latest in a wave of Silicon Valley layoffs. The best thing Facebook can say for itself now is that it isn't Twitter. Most of the week's gains came on Thursday, when the October Consumer Price Index rose 7.7% on an annual basis. While still much higher than the average over the past decade, it was below September's 8.2% and undershot Wall Street expectations of 8%. Excluding food and energy, core inflation rose 0.3% on a monthly basis, below expectations for 0.5%. Fundstrat's Thomas Lee called the data a game changer that could support a rally through year-end. In fact, he thinks markets could rally as they did the last time an inflation shock ended. Recall, in 1982, following the final low in August 1982, the S&P 500 reached a new all-time high within 4 months, erasing entire 27-month bear market, he wrote. That was a vertical rally. Others are less convinced. You would have thought something monumental happened that changed the backdrop, and I don't think that's the case, says Jonathan Golub, Credit Suisse's chief U.S. equity strategist. Listen, I'm a pretty bullish guy, but I'm not seeing something that justifies a 6% move. Golub thinks the CPI's relevance this month was similar to prior months. The numbers were just a couple of percentage points away from estimates and not enough on their own to change the trajectory of the economy or monetary policy. The outsized move for stocks reflected the market's coiled spring posture ahead of every inflation report this year. Investors have been on edge for CPI releases, with stocks moving an average of 2.8% on the day of the past 7 releases, Golub notes. He thinks inflation is likely to stick around because the labor market remains tight, exerting upward pressure on wages. There are about twice as many job openings as there ought to be at this stage of the economic cycle. He still expects the market to rise by the end of next year, but would fade the rally if he were a short-term trader. Tuesday's election was a secondary factor. The GOP underperformed expectations, but is likely to take control of the House. The Senate race was too close to call by week's end. Split government tends to be good for stocks, lowering chances of big changes to laws and regulations affecting businesses. The election caused outsized moves in a few stocks. Notably, gambling shares fell after Californians voted down a proposal to allow sports betting in the state.